Gina, welcome. Good to have you with us. Let's start with T. Rowe Price, big money manager, quiet player, but a financial nonetheless.
Yeah, and this is a stock that's actually gotten beaten up with the rest of the financials. If you look at T. Rowe's performance, it has performed in line with other financials and banks, and they look effectively like they're pricing in 2008, the 2008 financial crisis all over again. However, Lido owns this in the dividend growth portfolio, and for the dividend, it is actually a very good value. You know, this is a stock that we think has, just from a dividend perspective, a much higher price that can be supported.
And that would certainly be a help for the performance it's experienced this year so far. Let's switch gears now, Gina, and talk about it's going to happen because we're doing this and Best Buy. Bath and Body Works, what would you do with that stock?
So Bath and Body Works is one that we think got beat up because they took quite a bit of investment, an investment hit into their supply chain as well as into their customer loyalty program. However, we think that those investments are going to come back over time. And if you look at Bath and Body Works, they have an integrated supply chain that is primarily North America based, meaning that they're going to be able to defend as we continue to have supply chain concerns, and even inflationary concerns are a lot more contained as their supply chain is integrated on the ground here in North America.
All right, let's move on to the next one, which is Best Buy. You see a lot of Best Buy stores closing. That's been part of their strategy, I suppose, for many years now.
Yeah, this is one that we actually are a sell on. You know, Best Buy is one of those kind of consumer stories that doesn't hold up well in an inflationary environment, and a lot of the sort of pandemic-related, home improvement decisions and purchases have largely already been made. And if you're concerned about money and you're concerned about expenses, buying a big-ticket electronic item probably isn't on the docket. So we think that Best Buy is just going to have a pretty rough time for the next 12 months. Do
you know that company granularly enough to comment on its appliance business, which it went into, as you say, the home improvement trend seems to be ebbing just a little bit, but they have a lot of store space footprint in appliances now.
They do. And I mean, the challenge there obviously is not just, it's part of it is just inventory challenges. I mean, this is a company that's getting hit in every direction. So, you know, supply chain issues will hurt them. Inflationary issues will hurt them. They're going to get squeezed on all fronts. And they had a lot of business that came from everybody upgrading their kitchens and making big improvements on the house. So that was a tailwind. Now it's a headwind.
What do you think, Gina, about the fact that we had an 8-week down run for the Dow, worst in a century? We put together one up week and now we're in the red again.
That's a hugely concerning trend. And I think that part of that has to do with the fact that the Fed, basically, we started to hear signaling out of individual Fed members that they really don't have any desire to put a pause on interest rate hikes, even though we're starting to see some we're starting to turn the corner in inflation, and we're starting to see some of those numbers at least begin to tick down. They're basically saying that they're not taking their eye off of the rate hike ball. Yeah, so I think it's a really negative sign.
Shepard Smith here. Thanks for watching CNBC on YouTube.